Welcome back to Green Spud Trades. On this channel, I want to talk about stocks and some of the trading setups that I find interesting. I'm primarily a chart-based swing trader, but I also factor in the company's fundamental backstory when deciding to place a trade. So here are the setups that I'm looking at for this week, and today is July 10th, 2024. The first chart I'm looking at is Goldman Sachs, ticker symbol GS. Goldman Sachs, it's one of the top tier investment banks. This stock price seems to be breaking out. As you can see here, it had a long-range trading range with resistance at about 425. Now it's pushing through that. It formed a little bit of a dip and it's still moving up strong. And this is a type of trade that I think could last several months with a slow grind up into the new trading range. The next chart I've got my eye on is CARR Global, ticker symbol CARR. CARR is an S&P 500 component, and in 2020 it was spun off from United Technologies. CARR is the dominant player in HVAC and refrigeration. You may be familiar with the CARR brand of air conditioner, but they also own many other brands that seem like competitors, but they're actually owned by the CARR company. So CARR is very solid in the air conditioning space. Air conditioning isn't going to go away, and with new technology and new regulations for coolant always coming up, I think this is a solid company to own in a portfolio. From a technical standpoint, I really like how this stock has been range bound for a while with resistance at the 60 price mark, but seems to be breaking above that now. I think it'll be working on its next move up, probably to the 70s, maybe even 80 by the end of the year. Next, we've got this big breakout going on in the weekly chart for Uber. Uber started to break in this new trading range at the beginning of the year, and it's since fallen back a little bit. Very often, I think when there is a breakout about to happen, you could sometimes get an opportunity to get long the stock when it makes that retreat back to the breakout zone. I've been buying around here in my own trading of the stock. Initially, when it did the breakout, I thought it was going to go higher, but I think I got a little bit ahead of myself. But when it retreated back in this zone, the breakout zone here, I started picking up some additional shares. I should probably also mention that I took small positions in Goldman Sachs and CARR as well this week. What I like about Uber is not just this technical setup where it's breaking out into the new trading range and seems to have a solid support at the previous resistance area, but I also like that they are the dominant ride-sharing company. I think Uber as a transportation service is not going to go away, and I think this is probably going to be a decent long-term holding as a big tech company. This next setup is going to be kind of a weird pick. Yes, it's Grindr, the LGBT dating app. What I think is interesting about this chart is that it came down from a very high IPO price and has consolidated around sub $10 for a very long time. But just recently it started to take off and now it's above $10. What really catches my attention about this chart is the volume that we see here in the last few days, starting at the end of June, when it got this big bump right here on June 26th. The proximate cause, I think, for this surge in volume is this Wall Street Journal piece about the company and how they're changing their business strategy. They have a new CEO and they're trying to expand their services to generate more revenue by having more pay-for features and also expanding it to things that are not just for dating, but for many other services as well. From this standpoint, I think Grindr is different from other dating apps like Match or Bumble because they're breaking out of just being a dating app. And potentially they could become something a little bit more like how Uber expanded into Uber Eats, offering other types of services like that as well. They also recently settled a $6 million fine for handling of user data. This news is very recent, and it might be a good thing that they've got this settled and behind them. Like the other three stocks I've talked about, I've taken a small position in Grindr, smaller than the other ones. I think this one could see a little bit more momentum to get up to 13, possibly 14. An honorable mention for my breakout scans this week is Intercontinental Exchange, ticker symbol ICE. This is the parent company of the New York Stock Exchange as well as the Commodities Intercontinental Exchange. These stock trading exchanges are basically oligopolies with very little competition. I like this chart because it looks very much like a cup and handle pattern, where it's been consolidating for a good 3 years and it might be ready to move into a new trading range. But given the other stocks that I've seen on my scans that I think look like better charts, I'm not really so certain about this one because it's so early in the breakout and I don't see the volume behind it. A lot of times when a company is about to break out like this, sometimes it fails and it goes back into the old trading range and it might need a couple more tries. So I'm watching this one very closely. I think it might be a good long eventually, but I'm not really buying it right here. Now, to give you a better perspective of what these breakout setups could do, both positively and negatively, I'm going to run through a few recent examples. Here's a chart for Vertiv, which is a data center company that started to take off along with the AI craze. As you can see, this company was consolidating in this range. It had resistance here at about 30, and it had sort of like a cup and handle type of pattern. But then when it finally broke out, we got this huge surge in single day volume on the earnings release, and then it was off to the races from there. They were benefiting from the AI, and the stock just went parabolic from just sub 30 all the way to over $100 a share. Now, I'm not saying that these other companies that I showcased here are going to do the same thing. The Vertiv example was a very extreme case where that one was a very lucky kind of breakout. Not all breakouts play out that way. That's actually more of a best case that you're kind of hoping for. But in the case of Vertiv, it was going with the theme that the whole market was getting propped up by, which was AI and data centers. So let's take a look at a couple more realistic examples of how this could play out. One that's kind of neutral, and then one where the breakout kind of fails. And that way we know what they look like and what to look out for so we could set our stops accordingly. Here's a stock chart for the Snap-on Tool Company, a large cap established industrial company. I think this is comparable to probably CARR, although not so big. This company only has $13 billion in market cap, while CARR is a $126 billion market cap company. To show you kind of how these larger companies would move through breakout zone, as we could see here, we had a similar breakout back in 2020 where it rose from 183 up to 250 something, and then it settled back down, and then it traded in this new range for a very long time, forming a new cup and handle sort of pattern. And then last year it looked like it was going to do a breakout again, and as you can see here, I placed a couple of trades on this, and it rose through the breakout zone, settled back. You probably could have bought the pullback zone, and then now it's in this new trading range from 250 to 300. This breakout doesn't seem to be as powerful as the last breakout. It's a little bit sideways, but still nonetheless, over time, it's moving up. This is a very solid company in the area of automotive tools. The thing that I want to point out though is that the best part of the moves happened early in the breakouts. We had 1/4 of the stock price rising before it set back, and then it settled into the new range. And as a trader, this is kind of what you're looking for. You want to capture the action and the motion, while long-term investors, they're more comfortable sitting on it for the dividends and waiting for it to appreciate over time. Now, finally, let's take a look at this Lyft chart. Lyft, very similar business model to Uber. This company recently had a very good earnings report, and about the same time Uber started to break out into a new trading range, this company started taking off into the new trading range as well, but from a lower point. Let's compare against Uber's chart. So Uber, it's been steadily climbing, and when it broke up to the new highs, it was an all-time high. Not so much the case with Lyft, which had a not so good IPO period. They had their IPO, it traded very volatile, and then it settled into this lower trading range area. Now, that's okay. Sometimes companies, after the IPO, they drop for a while, and then they establish a trading range from which they break into. Palantir did exactly that. If we look up the Palantir chart, it had a very wild IPO, it settled in a low trading range, and then we got the huge breakout, and then it started going off to the races. Lyft could have done the same thing, but this one actually started to fade off. Let's zoom here in on the daily chart. Actually, maybe we'll make this weekly, and that smooths it out a bit. So as you could see here, it started to make its way through this new trading range, but then the momentum sort of cooled off. And as a trader, that's what you're looking for. This action just wasn't very favorable. It didn't get a lot of support, and it started pulling back into the old trading range. This area right here is about where people who bought the breakout here started throwing in the towel and giving up on the stock. Well, I hope you enjoyed those ideas for stock breakouts to look at. If you want more content like this, hit me with a like and subscribe to my channel for more videos like this. See you next time.